The coming week for U.S. markets is shaping up to be a pivotal moment, and not just because everyone is still buzzing about Powell's remarks at Jackson Hole. Many expect the stage is now set for a potential interest rate cut in September. But here's where things get tricky. The Federal Reserve must sift through a mountain of economic data in the next few weeks, weighing its dual mandate of supporting employment and keeping inflation in check. While the odds of a rate cut seem high, let's not kid ourselves. Nothing is guaranteed yet. With 3 more major inflation reports and a stack of fresh labor stats, including the crucial August non-farm payrolls, the path forward could end up being much more complicated than the market currently believes. And this is the part most people miss. We are sitting in a period of what you might call mild stagflation. Growth is slowing, remaining below its historical trend, while inflation remains stubbornly elevated. This uneasy balance doesn't look like it will resolve itself before year's end. What's keeping economists up at night, perhaps even more than the timing of the Fed's first rate move, are 2 broader questions. How many times can the central bank actually cut rates this cycle? And will monetary policy prove effective when America faces not just demand-related challenges, but genuine supply disruptions in both the labor market and inflation? It's important to remember, in today's economy, the U.S. doesn't just need more jobs, it needs more workers. This week, expect the July personal consumption expenditure PCE deflator to grab headlines, especially as it's scheduled for release on Friday. But don't get too excited. Since this PCE figure is for July, it probably won't add much new insight for policymakers or investors already familiar with the latest price movements. Still, economists anticipate a modest 0.28% uptick in July's core PCE, which would come as a bit of a relief after July's unexpectedly strong 0.9% jump in Producer Price Index, PPI. Yet here's a hot-button issue you shouldn't overlook. The real impact of tariffs hasn't yet made its way from producers to consumers. That process takes time, and the true extent won't likely become apparent to consumers until much later in the third quarter. On top of that, healthcare service prices have remained mostly flat, and while airfares and securities-related fees have recently risen, their impact on PCE measures has been limited so far. RBC Economics continues to warn of a potential re-acceleration in inflation as we approach late 2025, and tariffs are only part of the story. Persistent price increases in service sectors and technical quirks in how housing costs get calculated will probably keep inflation running hotter than the Fed might like. In other words, don't expect a green light for multiple interest rate cuts based on inflation data alone. If the Fed moves, it may have to justify it as a response to easing job markets instead. Here are some additional key data points to watch in the week ahead. Personal income and spending. Friday. Forecasts suggest personal income will rise by 0.5% month-on-month, boosted by gains in average hourly earnings and hours worked last month. Behind the scenes, there are noteworthy trends. As the job market softens, more people are receiving unemployment benefits, and the ongoing wave of retirements is nudging incomes towards Social Security and Medicaid. Meanwhile, personal spending is projected to grow by 0.4%, likely driven by a rebound in durable goods purchases as inventory levels shift. Will higher-income consumers start cutting back? And how are Americans juggling spending on goods versus services as trade and supply chains continue to change? Jobless claims. Unemployment claims could receive more scrutiny this week after last week's higher-than-expected numbers, especially since this week's report sets the reference point for August's all-important non-farm payrolls. Also, don't be surprised if continuing claims keep rising. Evidence, perhaps, that the labor market is cooling steadily rather than crashing. Housing activity. Stay alert to data on new home sales, building permits, and the SP Case-Shiller Home Price Index. America's housing sector is experiencing an extended slump, a major drag on economic momentum. Durable goods orders, while not usually a headline maker due to its volatility, This sector is especially relevant now because it sits at the heart of the tariff story. Expect a notable 5% drop in July, though this is almost entirely due to a slowdown in aircraft orders. Consumer confidence. Surveys from both the Conference Board and the University of Michigan are due. While these have often failed to predict actual economic activity, they might matter more this time around because the Fed closely monitors inflation expectations, some of which are woven into these confidence readings. Watch for any upside surprises. About the experts, Frances Donald, RBC's chief economist, leads a renowned team providing in-depth economic analysis for clients worldwide. Her expertise keeps her in high demand among major decision-makers in both the U.S. and Canada. Carrie Freestone is one of RBC's macroeconomists, keeping close tabs on consumer behavior, jobs data, GDP, and inflation. Disclaimer: remember, the information here is for general purposes only and doesn't provide legal, financial, or professional advice. Neither RBC nor its affiliates accept liability for any actions taken based on this update. For decisions about your specific financial situation, consult a professional advisor. The accuracy of this analysis is believed to be current, but it is not guaranteed and does not cover every aspect of the situation. All opinions are those of the authors and could change at any moment. And just because a third party or product is mentioned doesn't mean RBC endorses it. A controversial question for you. Do you think the Fed can really tame inflation without kicking the job market into recession? Or is the current approach already too cautious? Share your take in the comments. Don't hold back. You might see some strong opinions on this one.